Again, we are on employment, but this time we are looking at paid employment. We talked about self-employment and we know what it is. Now we are looking at paid employment. The employment which most of the people prefer to any other form of employment. Paid employment, everybody has ever heard of it, where you are employed by someone and you get paid. You do the work, after doing the work, you receive the money. You don't invest anything apart from your energy and the brain maybe. So we say this form of employment, which involves taking up a job in which you are paid a uniform wage, a uniform salary, which can be daily, which can be weekly or monthly. So if you are paid daily, it means you are going to be paid a wage. If you are paid weekly, it means you are paid a wage. A salary comes after a month. Unless you combine the wages and you pay them at the end of the month together with the salary, and you call it wages and salaries. So now, we say it involves taking up a job, you taking up a job in which you are paid a salary or wage. And when you are in an organization, you are in the department, you most likely receive the same amount, the uniform pay. That's why we categorize them as U1 extra, U2, U3, U4, meaning people in that category, in that department, will all earn U1, U2, U3, depending on the department which you are working for. But what is important here in paid employment today is that you work for another person. You work for another company, you work for the government, and you receive a payment at the end of a given period. It could be a day, it could be a week, it could be a month. And we said self-employment, you choose your own income generating activity, you get employed in it. But this one here, we are saying that you work for another person, organization, or the government, where you're going to be paid the same amount as your colleague in the department at the end of a given period. There is nothing much with the paid employment apart from knowing that you work for another person, an organization or a company or the government, and you receive your pay at the end of a period. That is paid employment. You are employed to work and get paid after a given period. So as paid employment, we are saying there are merits. We have gotten the merits, we have the advantages of paid employment. Paid employment has got the advantages, and of course we are saying that one of the advantages of paid employment is that there is a specific responsibility depending on agreed payment in respect to the worker done. So when you are employed, ladies and gentlemen, under paid employment, they tell you that we have employed you to work as a cleaner, we have employed you to work as a cashier, we have employed you to work as a manager, we have employed you to work as an accountant, we have employed you to work as a teacher, we have employed you to work like as etc. That's why we are saying specific responsibility. And after getting employed, they give you what we call the job description. What you are entitled to do, what you are actually supposed to do under that department. And after that, you will be paid for the work that you have been given. That's why we said specific responsibilities depending on agreed payments in respect to the work done. I'm going to give you a job to work as a computer technician. How much are you going to earn? You agree depending on the tasks that you are going to handle. So that is an advantage, that you go to work while knowing that you are going to do this and that. So there is a steady income. Steady income means that when you are employed, you will be told that your payment shall be this, shall be 1 million, shall be 2 million, shall be 500,000 shillings, shall be 150,000 shillings, any amount. And after you have been told, you will be knowing that every after a given period, I shall be able to earn this amount of income. It means your income is intact. There is not any disturbance. There is no one that is going to tamper with your income. If your agreement was the agreement was made and you agreed a given payment, then it means that you will always be paid that money that you agreed upon. So there is minimum risk, and the employee is assured of his or her pay. The risks that the business, that the company, that the government may encounter, may face, are not in the hands of the employee. The employee is less concerned, are not going to tamper the employee's salary, the employee's income, because he has minimum control over those risks. For him, he's an employee, but the business has got the owners, has got managers who are responsible for overcoming such risks. For him, he has to perform his duty and get paid at the end of a given period. Then an employee may enjoy fringe benefits. Fringe benefits, those are supplementary benefits. The benefits on top of your salary. The benefits on top of your pay. So if you agree to earn 1 million, they can add you more benefits. Fringe benefits, supplementary incomes, supplementary benefits. And for example, you may be given a job and tell you, we are giving you free transport, they give you a car, give you free house, free housing, give you free medication, give you free airtime, free meals, free. Those are benefits that an employee earns on top of his or her salary. So these are fringe benefits in paid employment. And who gives them out? The employer, who could be an organization or the government. So these are the benefits that an employee may get under paid employment. Then reduces fatigue of the employee, since there are no fixed fixed and favorable hours of work. You don't suffer much. You know, from this time I am going to be at the workplace, and at this time I have to go home and rest, so you don't get fatigued. So for this matter, it is an advantage. So, but in self-employment, you work for long hours, you work at night, you don't have time to rest. But for us here, we are saying you don't overwork because you have specific hours that you are supposed to work. Then there are chances of further training for workers in some companies, in some organizations. So you may reach an organization, they give you the job, they take you for further studies. And on whose money? On the company's money. So these are the chances that someone may get underpaid employment. And we are saying it is easier for the government to collect legal payments, and these legal payments, we are calling them taxes. So when you are employed, the employer, we always submit your income details, which will be based on by the government when it is charging you tax, especially employment income tax, which we call pay as you earn. This is a standard abbreviation, meaning pay as you earn. So the government will not know how much you earn unless it gets information from your employment agency. For that matter, we shall say that paid employment is good, basing on these advantages, basing on these merits. Let's meet in the disadvantages of paid employment in the next session.